Hello and welcome everyone. It's really great to have you all join us. For those of our regulars, nice to have you back. For the people who are joining us as a special guest this evening, hello and welcome. Just a little couple of little suggestions. When we like to engage with each other as we go through these Q&A sessions, and the way that you get my attention is to raise your hand. Sometimes I'll just test that I'm loud and clear and you're hearing me by getting you to raise your hand. So let's test that now. There's a little hand symbol on the console. So hit that button now and we can see that it's all working. Fantastic. Oh, wow, look at you all. That's amazing. Thank you. If you have any comments or you want to answer a question, sometimes I'll throw a question that needs more than just a hand raise. Simply use the chat window for that. So you'll notice there's a Q&A window, but there's also a chat window. The chat window is the one that I like to focus on. It's nice and it's just easier for me to manage and try and keep track of everything. So before we kick things off, are there any questions relating to this week's past trading? Is there anyone? So some of you have submitted to me some trades for review. I'm looking forward to getting into that. Before we get into the trade reviews, are there any sort of general questions? I'll take questions from obviously from the people who know the strategy. Yep, Elizabeth, you've got one you want to kick off? You want to chat? You want to type in the chat window quickly? I did get your email, thank you, and I will be going through that. So type away. Oh, Victor, you've got a question you want to ask as well? If I get you guys just to give me a little clue in the chat window, so just type away, and then we'll get into it. So the thing that has, there's a couple of things that I want to bring to your attention. We're going through the earnings announcements at the moment, and that's happening in Australia and the US. And I'll just make you guys aware that a chart can look a certain way, and then suddenly things can change drastically because of an imminent earnings announcement. So did anyone get caught out by that? We covered that in a couple of Q&A sessions ago. So we still need to be mindful and aware of that. You want to, get in ahead of that market move coming. There's a couple of great examples at the moment. I might just dive into the charts and show you some examples actually. So one that comes to mind for me is ORI, and you can see by the chart. So can you guys all see? It's actually an ASX one. So look at that. I mean, I'll show you the chart in full screen like this, and we have this neatly downtrending one, that's perfect for a bear call spread, and suddenly that's what can happen when you suddenly engage in a situation where earnings, and those earnings were actually today. ANZ was another one. So again, another Australian one. ANZ also had a move that was, see that there, just on the right-hand side? It's just totally out of kilter. So that's something to continue to watch for as we lead into it. And as you guys know, that our scan tool highlights that. I'm just going to pull that up on my screen. Just bear with me 1 second. Open this to a new window, and I'll pull it across. And so, as you know, our scan tool actually highlights what is earnings imminent with that little megaphone there. So that's helpful. So I just want to make sure that you guys remember to double check that. You can have the scan produce a stock that meets our IV ranking and our volatility is all up to scratch. We can look at the chart and see it all stack up, and then you suddenly, if you have overlooked the earnings announcement and the date that it's imminent, that can catch you out. So I want to just remind you guys of that, because that will continue to be the case for a couple more weeks to come. So yeah, we've got 1 year, 19th of the 11th. So another 7 days on that one, 20th on that one, etc., etc. So yeah, who's been paying attention to it? Hands up if you've been paying attention to the earnings or the possibility of the earnings are out. Well done. You guys are doing well. I had someone share a trade with me earlier today, actually. I think it was GM. And he asked me, where did I go wrong? And I said, was it an earnings thing? And then he sent me the report. So yeah, GM, ooh, all beautiful, and then bang, get caught out there. And yeah, it's, you know, it's unfortunate when that happens because it's such a simple thing. You can get so absorbed in the the more complex analysis around that scenario, and then that catches you out. And it's just something so simple. So if you feel that you might be at risk of overlooking that, then write it down, put it in your trading plan, highlight it at the top. And it's only relevant as we go through the next couple of weeks or so, but it's something to keep in mind for the future. So I've had, as I said, I had someone report that to me today, and my first response was, where did I go wrong with this one? Why did you change? I said, I was at earnings. And he went, oh, yeah. Alrighty. I'm just reading the questions. Are chart setups that we do analysis on able to be saved in a file to quickly get out and review? Absolutely, yes. In fact, that's what we're doing here. So there's a couple of ways that we obviously do the reviews, William. So this is someone who's one of our special guests asking the question. We use the same charting platform. So by sharing the details with me, that looks something like this. And I'll give you an example actually. Elizabeth, just by a show of hands, would it be okay if I just quickly flicked up your email so people can see how we go about submitting charts for review or trades for review? Is that okay? Yeah, thank you. Alrighty, so I'm just going to dive into my email here and pull across. Where are you? Here we go. I'll grab this one. And so this is from Elizabeth, and she has listed some trades that she's entered recently, and just for me to have a look at and give her some confidence around. And it's as simple as that. The code, what strikes she's chosen for her spreads, and then the date she's entered, and some other details, obviously, that until you get into the course, you won't really mean anything. But so, it's driven by, that is enough information that I need to be able to do that assessment. And then I just simply call up the chart like I am about to demonstrate as we get further into it. So, Vic, your trade on BA, I try to let you off the hook because that wasn't your question, but someone else has picked up and asked me, would I have traded what Vic's trading on this one? And mate, I'd have to say that you're going against my trend rules. So let's map it out. Let's start from scratch. Okay, so we got BA here. I'm looking at the 5-year chart as per our usual process. Even if I put that extreme at the extreme edge, which we like to do with our resistance lines and support. So keeping in mind it's a range, so it could be anywhere in that range there. So I'm just going to position it there for comfort. Okay, so far so good. Okay, now I got a 2-year chart, and I'm not seeing any sharp patterns there or anything like that. We did have a nice little trend through there, but that's now well and truly changed, and that's been taken care of a while ago, so none of that's relevant, so we'll drop that off. Okay, so that's all good, but I bet that was Sam. Is that you, Sam? Raise your hand if it was Sam that picked up on that one. Yeah, okay, great. Right, so when we go back to our course, okay, just so we make some reference to it, I'm just going to quickly put the course on here. If we go into module 2, which is all about our candlestick charting, trading reversal patterns, advanced trading techniques, etc. So in this part of the course where we talked about trend, and we talked about candlestick charting and some advanced trading techniques, in those particular lessons, we cover, just bear with me, I've just got a menu that's in the way here. Just going to move it over, move. There we go. In those particular lessons, I'm a big, shall we say, emphasizer, that's the word, of following the trend. So this one, when did you get into this one, Vic? Oh, this was part of a condor. Okay. All right. Okay. 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 Yeah. Okay. So Vix is adding that it's part of a condor. So yeah. Um, sorry, I'm just looking at some of the conversation that's going on at the moment. So if anything on this one, I would have preferred to have a bull spread, if anything, with my strikes position somewhere down here, somewhere down there, as an example. And my reasons would be that it's currently trading above our 200-day moving average, and it's also trading above our 10 and our 30 as well. And for those reasons, I would feel more bullish about this particular trade than I would a bearish. So at this stage, you know, if you are looking at it in an iron condor scenario because the moving average has been so close together, then yes, that is a possibility. I must confess, I would have preferred to have these be, you know, quite aggressive on the put side, but on the call side, just in case she resumes her trend. I mean, it depends on when you got into this, but so did I ask the question? Have you, Vic, do you know what date you got into this trade? This might have some relevance to. Is that a can't remember? Yeah, can't remember. Okay, would it be in the last week or? Raise your hand if it's in the last week. About a week ago. Okay, all right. So it's in this period, yeah, sure. And okay, so fair enough. And at the time, it's clearly, you know, consolidated around, you know, with the moving averages being really tight, and I can see how it'd be hard at that stage to, I guess, preempt which direction it's going to go in. When in doubt, follow the moving averages. It's above the 200. It's bullish. If it were below the 200, I would treat it as bearish. You're not in any sort of danger yet at this stage because, you know, it still needs to run all the way up to that level there, and it has to penetrate that level before, you know, you're at any risk. But I just wanted to satisfy Sam's critique of why are you just doing the call side when in this particular chart. So are you happy with that, Sam? Glad you had a trade. Oh, you had it. You had this one as well, did you? At 310. Yeah, perfect. So, yep, great. Sam, can you just write for me where your written strike was and where your board strike was? This looks like we're on the same page. $320 and $315. Yep, perfect. Okay, so you were just up a little bit there and $315. So you're in the same vicinity as where it's striving for. So obviously, you know, so here's the thing, right? Depending on what the premiums are like, sometimes you have to go just inside. Obviously, our preference is to position our strikes outside of support or resistance if we can get the premium. If you wanted to be more aggressive, you may split them up like this. And, you know, at times we have to do that, especially when, you know, my normal rant that I go on, which is talking about the SPY and what it's doing. So when we look at the SPY, which has had a very, very interesting period in the last couple of weeks, I mean, this is crazy, right? So we've got this massive bullish market right up until about 2 weeks ago. Then she's fallen quite aggressively, and it's come down below. Let me get into it closer. No, that's about as good as we can get. And it's fallen below the 200-day moving average, which is an extremely bearish move. In fact, it's, you know, entirely below all of our moving averages. But I remember when we had this conversation a couple of weeks ago, I said it's an interesting scenario because we have these major support and resistance levels here that would have to be breached before we're in trouble. And I think last week in particular, I said that, you know, now that it's broken below there, that is very bearish, but really until it breaks this level here, it could, you know, it could very well recover. And so, you know, some of you would recall, I wasn't making any recommendations around that, but to see where, you know, where she heads. So, you know, it broke a major long-term short-term trend in that regard there, but in the last couple of trading sessions, it's recovered above that, and it's again above the 200-day moving average, which is extremely strong and bullish. Yeah, I see a hand up, Vic. Yeah, so that it's an interesting scenario that it's recovered so quickly. Now, there's a lot of there are two major reasons right now that's affecting the market and making it, great for trading our strategy, great for trading spreads, okay? And that is when you have uncertainty around elections, which is obviously going on as we speak at the moment, it will cause these gyrations in the market, which is perfect for our strategy. We like it. We love it when the market's jumping around in a sideways band, okay? So it's trading resistance level and a support level, and she's swinging between them, and if we're setting our strikes outside of that, it's a perfect scenario because you've got a consolidation pattern happening, making it quite predictable, quite tradable, using our strategy as an options trader. It's just absolutely fantastic. In some situations, if that takes the volatility out of the market, then that becomes, obviously premiums don't pay as well, but the fact that when we look at the volatility index, or what we call referred to as the fear index, we have had it, break quite high and trade in the last couple of weeks in that range there, which has been generating, healthier premiums than normal. Of course, in the last two trading sessions, since the SPY has moved above the 200-day moving average, that volatility has dropped quite significantly. So, we're in a situation now where the market's obviously being influenced by elections and some decisions going on around there, and combined with the earnings season. So I expect that we are not necessarily going to see any sort of clear direction from the market, or what we measure in the SPY, as you guys know, as our major index and our trading plan. It may require the next couple of weeks to find its feet. Having said that, it's resumed above that major diagonal trend there. So it'll be interesting to see if that holds. And if that does hold, then things are going to continue to be strong in the stock market. Certainly, stock market's been amazing for an incredible run. And a couple of things on that is if you're holding equities, it's fantastic. At a time where the Australian property market is still trying to find its feet, I actually think this is the best time to go into property, by the way, because there's some, good deals, especially being a property developer. It's a good time to be looking at property. Whereas the stock market's still enjoying this amazing, especially the US market, this amazing bullish run. Now, having said that, when we look back historically and we look at the SPY at these high levels, there's always a concern that has it reached the end of its up run, and does it mean that the market's going to turn? Is that imminent? It's always a question of value, and that's what I emphasize to you guys all the time is all we're really wanting to do at any given point in time is when we're looking at a stock chart, irrespective of whether it's heading up or down, is to ask ourselves, is that particular instrument overvalued or undervalued? And if you can get a perception of it being undervalued, you can have a scenario where stock can be up like that on its chart and still be undervalued based on its price to earnings relationship. So when we go back to any sort of historic peaks in the market where we would have seen charts like this, where the market has become overvalued, then that is an indication that it's about to turn and swing down, and it can swing down quite significantly. The interesting scenario that we find ourselves in here is that it's had this incredible run. That's a 5-year chart that we're looking at there for an extended period, but it's not actually overvalued like it was in the past. PE ratios overall are still, at a very moderate level, which is an indication of, the possibility of a continuance of this. And so that's good news. And, I'm sure a lot of people have different opinions about Donald Trump, and I will confess I get quite embarrassed every time he opens his mouth. But there are some incredible things that he has done for that country, in terms of unemployment, in terms of bringing, a lot of sort of domestic trade back home to the US, and And he's actually, despite the character and the assessment of all those sorts of things, and his history and his past and all those sorts of things, he has actually done some incredibly good things economically for that country, which inevitably actually translates to other parts of the world economically as well. So, you may not like him, you may not like his what comes over his mouth, but in terms of the effect he's had, the positive impact he's had on the economy, which he was appointed to solve problems in, I think he's done an incredible job. And the American people are a lot more excited about, him continuing, I would imagine. And so it's an interesting time, and it does affect all of us in some way, shape, or form. It certainly does. And the thing is, he was very successful as a businessman prior to becoming a president, and it's nice. It possibly makes him more qualified than most people before him has been to solve business and economic issues, that he has that business experience, and he's bringing that, and then the ability to negotiate and all those sorts of things as quirky as he might seem. So I'm glad to see some people have actually commented in the chat that they agree. Again, I'm not saying that I favour what comes out of his mouth, but he seems to be having a positive impact, and that affects us as well. The Australian market is also going through an interesting phase, and we've had a big turn in the last few days as well. So it's too early in its run to tell if it's going to have the same experience as what the SPY is having. But again, the SPY has a positive knock-on effect. So that's the Australian index. The last couple of weeks have been horrendous, and the last few days have been amazing. So and today was another up day, and that's a bullish candle that we're seeing there as far as our candle patterns, which is covered in lesson 4 of module 2 in the course, this candlestick charting, and that is a very bullish candle there from today's trading as well. The difference here with the Australian market is that it's now below the 200-day moving average, which is quite bearish, but it's doing this retracement. Does this necessarily represent a change in trend? Not necessarily. It might just be a temporary pullback. It's around our 30-day moving average, which is normally where we look for the exhaustion of a pullback. So the next 2 days will be quite interesting. If it breaks above that, then we know that it's in a recovery. Looking at this chart, it's more likely to have a pullback that pulls it back down. So it really depends on how much of what's happening in the US translates over to the Australian stock market to determine. It really is that decision point here. Would you agree that if it breaks above that 30, it's an interesting possible short-term change in trend? However, this is normally where our traders' action zone, where it actually pulls back into past the our short-term moving average, going to our medium-term moving average, and that's where we normally catch most of our reversals. So it's had 3 trading days there now at that reversal point. Having said that, it produced a bullish candle today, so let's see what the next couple of days will bring for those who are actually trading Australia. It's an interesting one, that one. A 200-day moving average is pointing down, however, a bearish sign. But on the flip side, we've got a SPY that may cause all of that to run in a nice bullish direction again. So let's see what happens. Yep. Any questions? Everyone's in stunned silence. Raise your hand if you have a question, and then I'll give you a chance to type it. Oh, Ian. Nice to see you back, Ian. We haven't seen you. That's Ian B. We have a couple of different Ians. Okay. Type away, Chris. Picking tops is not our game. Correct. It has no importance to us. We like just grabbing it when it's doing the middle stuff, and that's the beauty of being a spread writer. You don't have to pick the direction as accurately as if you can catch it in the constraints between support and resistance. That is our advantage. So it gives us a lot of flexibility in that way. On this particular one, on the SPY, I don't tend to trade the SPY. So you're looking at the SPY, Chris. And we're seeing a big wild swing. I would use other indicators as well, but it is the SPY. Yep. And we use that mainly as our barometer. We don't actually trade it. Okay, so I'm not seeing any other. Ashley, I see your hand raised. Very good. Nice to have you back, Ian. No problem, Chris. You've only been in the course for what, 3 weeks now. So how's it all going? Hopefully you're ploughing through it now. Got a bit of momentum going. Alrighty, so I'm going to grab start doing some trade reviews. Raise your hand if you'd like me to do some review of some trades. I've got a nice list in front of me. Yeah, fantastic. Let's do it. Okay, that's when we tend to have fun. So the first one I have is XBI, and this is from Elizabeth, who's kind enough to share some trades with us. So this is obviously one of our ETFs. And there we go. Okay, so Elizabeth, you got into this one on the, so we'll do the full analysis on it. So I'll just double check my 5-year chart. It's trading there at the moment. Bearing in mind that we're interested in the most relevant line of resistance and line of support, the one that is most imminent to where we are. So this, remember, this could also be that range there. If we were to take the more conservative approach, we'd put it slightly further out, because it means that when we set up our strike prices for our written options, they would be outside of that. So when in doubt, either there or there, go outside. In other words, the position slightly further away from where the share price is at the moment. And the same with your resistance, given that the share price is trading there, you would go that little bit further. In this one's a little bit clearer, but you would choose the outer point. And you always have to think of support and resistance as zones. So the line could either go there or it could go there. In other words, that makes that area, that region there, our resistance zone. And I'm suggesting that we always choose the outer one, so that when we end up doing our spreads, if we write our calls above, you'll be writing above that one. And if we're writing puts below, based on other analysis that I am yet to do, we would write down there outside of support. So outside of resistance, outside of support. But let's not get ahead of ourselves. I'm just going to drag these lines. Whoopsie, wrong line. Just going to drag these lines away for now, and then we'll do some further analysis. Okay, so on the 5-year chart, as always, we try to establish any sort of long-term trends as well, or chart patterns. If I were to pull a line through there, has that got any relevance to where it's trading now? No, it doesn't. That's been well and truly broken. And if a line has been well and truly broken and we don't see any relevance to where it's trading now and where it's going to head, I prefer to remove it. Okay, raise your hand if you see the benefit in removing it, getting it off the chart. What happens is, if you leave it there and it has no relevance any longer, it may actually get in the way of you spotting a different pattern, a pattern that is relevant right now. So you certainly draw it in there, verify it against where the chart is trading now to see if it could potentially still have a bearing on it. But if it has no bearing, get it off. Okay, different with support and resistance, obviously, because this line of resistance still has relevance to where it's trading now and where it might go to, and this line of support still has relevance. So, definitely you want to have, if nothing else on your chart, you want to have established where the most relevant line of resistance and support is relevant to where the chart is trading right now, okay, in the very least. So don't clutter your chart with too much stuff. We don't like that. It creates confusion. Alrighty, so I'm going to go in a little bit closer onto the 2-year chart. And just taking a closer look, do I notice anything that's different from before? Not really. Nope, that's all good. Now we look at our moving averages, and Elizabeth has advised that she basically did a bear call spread on this one. So she wrote at 90 and bought at 91. So for our special guests, we write a call. Whoopsie. Let's try and do those lines straight, eh? So we write our call above the share price, and we change the colors to this format here so it stands out. So Elizabeth wrote at 90, which is up there. That's a nice safe distance away from Elizabeth, do you remember what your return was? Yeah, as a ROI on this one? Because that's a really nice safe distance away from where it's trading. You had an IB rank of 78. Yeah, okay, that's good. Nicely done. I think it's a very safe place to be. Well done. And then you've actually just changed my color, make it all pretty and relevant as we normally do. And you've got so this becomes your insurance. Alrighty, so that's what it looks like. And you entered this particular one on the 5th of November, so I really should have drawn that first. So the 5th of November, see, they're coming back, is there. Okay. Oh, so it's very recent. That's around there. So just, I'm going to turn my crosshairs on, sorry. Let's see exactly when the 5th of November was. I'm nervous because we've got visitors watching. We've got special guests, and we do this every week, and I don't have an issue with it. Okay, so that date there. Alrighty, so that's your day you got in. Where my thingies go? What just? Oh no! I just drew those lines, and then it disappeared. What happened? That is really odd. Why did that happen? Let's do that quicker. So I had that one at 90. And 91. Is our bought one. So this is our insurance. This is what. So with that leg, it was an unlimited risk strategy, but with that, it's now a capped risk. So you know exactly what your worst case scenario is when you go into the trade, and you can't lose any more than that. And that's why we love it, because it's a great strategy for beginners to start with. It has a level of complexity, 22. Okay, great, perfect. All right, so good return. So 22% return. On that there, Elizabeth, that looks beautiful to me. I don't know why my line's disappeared. Obviously, I must have done something naughty. And yeah, great. So do I have anything to add or comment or criticize about that one? No, not at all. Does anyone else have anything? And what I love about it too is you've caught it in the TAS as well. It's perfect setup. Well, wonderful stuff. So there's so many reasons why I love this trade. Can I hit it from the top? Okay. Assuming you had the same resistance and support lines as I do, the fact that you've ended up with your strikes that far away makes it an extremely safe trade, in addition to getting a 22% return on your investment from the time you open this trade. Fantastic. Wonderful stuff. Okay, next I will add that the way that you've followed the trend, you're below the 200-day moving average. It's swinging down, and it's clearly bearish, confirmed by that 200-day moving average that recently retraced from. I like the fact that your 10 and your 30-day moving average are where they are, and I love the fact that you've used the TAS and a reversal within the TAS to signal your confirmation of that pullback, and you've probably got your high premium because of this run into the TAS. Because often you would have you could have a scenario where you try and do that at that distance away and you don't quite get the premiums because she's already going in the other direction. The market was actually reading this as a potential resumption of the uptrend, and that's why you got those premiums there. So you've traded it absolutely beautifully. If you guys could discipline yourselves for just looking at that style of setup, which we see, we see a good at least 6 of these a week when you go looking hard enough. If you limited yourself to just these setups, your trading would be so effective. So well done, Elizabeth. You've really absorbed the lessons from module 2 of the course extremely well to find that particular setup there. So hats off to you. Mark, when do the options expire? I'm assuming you've got a 30 to 60 day expiry on this, Elizabeth? 21st December, Mark. Yeah, so well done. So 21st December, so it's what's that, around 40 days or something like that. Yep, perfect. Very, very good. Very, very good. Okay. Oh, there's multiple marks. I thought it was jeweler mark, but it's not. It's a different mark. No surname. Yep. Okay. Oh, very good. So we'll do another one. Does anyone else have any questions about that particular trade and that setup? Or Elizabeth's reasons for choosing that, which I could easily answer. Can I put a vertical line at entry on the 5th? Yep, I tried to do that and then it went skew with for me. Vertical line at entry on the 5th. That's the entry right there. And so what's happened is it's touched into the TAS. You've got a lower low than the previous day's low and a lower high than the previous day's as well. And that's why you've entered there. And even though it retraced, you had a couple of days go, actually theoretically go against you. It's not, because it has come all the way up here, but theoretically it's done a second move into the TAS. It still hasn't affected the trade, and then you've got this fall away. So it tested it, it was exhausted, the second attempt, and bang. There was a retest of that, but you're below that resistance level there, which is a really strong one as we look through here. Yeah, beautiful, beautiful, beautiful. It'll be interesting to see how it pans out, but I think I know where this is headed. That now is such a significant bearish candle in that downward direction. I'd be very, very surprised if that was able to swing and come up all this way and breach there. You'll probably be able to shut this trade out within a week, the way that's going. You get another couple of moves like that and it's sitting down here, those options will go to being worth nothing in your favor, obviously. Close them out for way, way less than the credit you received, and on to the next trade. Good one, Elizabeth. Making me very proud. At what point would you buy this back? So there's a few things, Niels, that would cause this to have the time decay that we wanted to have. One is a directional move. So I did one, LLC one, Lend-Lease Corporation one in the Australian market, which I'll flash up if we get time, which did this big move, and, you know, a week and a half into it, those options are worth nothing because they're so far out of the money that you can close it down for next to nothing. Now, having said that, if it did move down here, Elizabeth, may I suggest that you look at not necessarily closing both legs, but just closing the written leg, because the written leg is the one that's actually against you. The bought leg won't be worth much to on sell, but, you know, between now and the 21st of December, if you closed it out, you took your profit off the table by buying back the written leg. You got your 22 cents at the start. You might buy it back for a few cents, walk away with a credit. Keep your bought leg there, even if it's worth not much, in case the share price turns and swings and starts running up. You've already paid for that one. It becomes like a little lottery ticket for you after that, after the initial part of the trade. You may get a second hit on it, especially if the market's suddenly bullish with elections and all that sort of thing going on. You may get another chance at that. Did you follow that? Yep, you got it. Okay, I see that. Good stuff. So let's say it goes there, and it goes there, and even more so, let's say it breaks down there. By the time it gets down there, that's not going to be worth that much. You buy it back, you close this one for whatever amount of money, but you hang on to this one, okay, it then becomes a straight bought call. What I do then at that stage is I change the thickness on it and I change it to a yellow color. I now know that what I'm dealing with now is no longer a spread trade. The spread's already paid off for me. I've now got a free straight call. If the market then recovers, you've already paid for that. You paid for that as your insurance. If the market were to recover, I'm just going to overemphasize it here for a second. Whoopsie, not that one. The market starts to do this. And let's say, it may or may not. You don't need it to do this. You do not need this. But as a bonus, if it did that sort of recovery over the period between now and the 21st of December, that will now go into being worth a lot more than what it's going to be like down here when you close out the written leg. That gives you a second bite at the same trade, and it's cost you nothing to do so. And that's the conversation I was having with David Forbes 2 Q&As ago. Yep, nice wee strategy there, indeed. Yep, you've already paid for it. So the lesson, guys, to keep in mind is when you have already bought these and they have served their purpose, by the time they have the time decay, don't just offload them. Don't close out the whole spread. Just close out the leg that has relevance. As soon as you close that leg, as soon as you close out the written leg, you're going to receive all your collateral back and the full value of the profit's going to come your way. That becomes a free trade right now. And if it continues to go the other way, it doesn't cost you any more. It wouldn't matter. But if it swings, bingo. And I probably have 1 out of 6 to 8 have that give me a second crack for free. It's a free trade. Already made your profit. If it's confused you, don't worry about it. When you do the course and you go through all the modules and you dive into module 4, is it? Module 4. No, it's actually module 3. Module 3 of the course. This one here. Module 3 of the course. Options. There are 1, 2, 3, 4, 5, 6 big lessons on how options work, options definition, examples, types of different options, and it's in this section here in the option strategies that we actually cover what I've just gone through very quickly. Yep, so you guys know that. Alrighty, so any other questions about this one? Who got some gold? Raise your hand if you got some gold out of that little last hang on to your lotto ticket. Yep, you've already done your professional trade, you already made your money, turn it into a lotto ticket, it's free money to you. Well done. Great, you guys, love that. How would buy one leg back? You would go into, yeah, no, I'm not able to because market's closed right now, sorry, Martin. Yeah, you go into your portfolio screen, you right click and you close it out. But I'm not able to because the US market is closed at the moment. Yep, certainly. Looks like an Elliott wave in action. Correct. So basically our retracement into what we call the Traders Action Zone, the TAS, is the early part of Elliott. Correct. Okay, so any study that I've done previously around Elliott wave made it really complicated, hard to see, hard to determine. You can, is it wave 1, 2, is it, all that sort of stuff. I have gone through I've created a very simplified way of actually following it, and not even referring to it as Elliott wave. It has Elliott wave at its core, but as soon as you say Elliott wave, people sort of glaze over and get very theoretical. And I've managed to nicely simplify it so that anyone can follow it just by using our moving averages the way that we do and waiting for a breakout below support and then a retracement from the next line of support to resistance, and we look for a candle pattern, specific reversal candle pattern around that 30-day moving average there, and that is marks the beginning of that next Elliott wave without thinking of it as Elliott wave. Yeah, it's much simpler. It's a much more coordinated way of doing it. Okay, well done, Elizabeth. Thanks for that one. let's move on to the next one. IWM. How are we going for time? Oh, yeah, we got time. All right, so what's the first thing that I do, guys? Tell me what chart I need to be pressing. There's a little clue on the screen. Which chart do we look at first? Big picture, big picture. Come on, give me some answers. I'm looking at new stock. I'm going to do the analysis from scratch. Yes, 5-year. Well done. Okay. So look at the 5-year chart. And it looks very similar. Well done, Elizabeth. I'm assuming, oh, your entry was same time? 6th of November? Yeah, okay, great. Same time. Alrighty, so we're there. Okay, some of you may see that there, and I'll tell you, I'm going to draw both, and then I'm going to tell you why one is valid in my opinion, and the other one is not. Okay, this one's quite simple there. We've got that there, that there, that there, and there. Now, if you find yourself, and who was it that I was looking at? Roy. Roy, are you here tonight? No. Okay, this is an example of why. See this particular line here. I'm not going to call it resistance. No, this is not the example I wanted. It's not the example I wanted. Sorry, not the example. That's fine there. It was a different discussion. I was looking for a particular chart to demonstrate a certain thing, but this is not the one. This is fine. This is fine. Okay, so that's where we would have our resistance. That's where we would have our support. I really needed this to be different here, but no, it's okay because we got that zone there. We look for any patterns. So we're looking for a major trend through there. Do you agree that that's already been broken? Hands raised if you agree that that's been broken. So if it's been broken, does it still have relevance? No? Okay, so what should I do with it? Yep, we can get rid of that one. Yeah, but draw it, and just double check it because you may spot something else in the situation. I'm looking for any other patterns that I can see here. No, we've got that breakout there. All right, what's the next chart you want me to look at? I'm done on the 5-year. What would you like me to do next? 2. Okay, so we're looking at a 2-year chart. Here we go. We've got that one happening there. Are we seeing anything different from what we've already seen? So the main purpose of the 2 years is just to see if there's anything else that we didn't spot now that we're getting in closer. But we don't start closer because we always want to capture the big picture first. Because once you get in this close, you're no longer seeing the bigger picture, and you would miss a long diagonal that's a major trend that's been occurring for the last 5 years, which you would miss it if you didn't look at it. Okay, so now that we've got a corroboration between the 2-year and the 5-year, and we can actually see that that is relevant to those points there, but it's also relevant to those points. And so we've got a zone here. And what do we take away? Do we have it closer or further? Closest point or furthest point? Closer or further? Closer or further? Come on, give me an answer. Furthest, yes, there. Why? Because if we ended up doing strike prices, we're going to endeavor to have it outside of that range. So if we chose the furthest point outside of that zone, not the inside of the zone, in other words, if we're calling this zone here a resistance zone, we're choosing the outside point so that we are more conservative in where we end up putting our written strike if we did. Yep, so that's the reason, just one more time. In the same way, if we were going to end up doing a strike on the bottom end, we wouldn't necessarily have it in tight. We would choose it slightly further out and look for other evidence of where it should be positioned as a zone. Because again, this could be a support zone that looks something like this as well. It could be there or it could be there, right? So you got both of those. In other words, that's a zone. So we choose the outer so that if we end up putting a strike down here for our put side of a spread, we would end up being outside. So that's the logic behind it, making it therefore more conservative. Further away from where the share price is, okay, as our guide. Alrighty, having said that, tell me where to go now. There's a little clue. 160, yes it does. 160 does look important. Alrighty, so we go into our moving averages, and we are seeing that it's low at 200 day. It's on a pullback into the TAS, same setup as the other chart. Well done, Elizabeth, for all the same reasons. Really, really well done. Awesome stuff, okay? I love it. And we're looking at the same day of entry, which was the 5th. So let me put a vertical line on the 5th of the 11th, which is that one there. So we're getting in there. Fantastic. If there was one criticism, that it was still building on the TAS, look, just be aware. I'm just going to make you have not made that mistake. The strategy is so forgiving that it's permitted you to come out of it. But watch for the following. I'm just going to give you a little tip. When I see a beautiful TAS set up like this, it's broken through support and it's doing the pullback into there, get close in here and watch these candles. And what you want to do is enter the first time you get a swing point high. In other words, let me just describe a swing point high to you here. Are you with me, Elizabeth? I'm just going to make these thicker. Pretend these are candles. So let's say you've got a series of candles leading into it, okay? Back into the TAS. So I'm describing this here. I'm just going to give you a bit of a lesson. While you've got this series leading into the TAS, there is still the possibility that it could go bang, 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 and keep going. The point at which we have validation that it is a temporary pullback that is going to reverse, we only know it when we actually get the candle reversal. And the way that we know that the candles have reversed is when within the TAS there, you have a scenario where you get something like this happen. Okay. And the color of the candle is not that relevant here, but the importance is, so what we have here is a high, higher high, and an even higher high there, okay? And we have a low. This one's low is higher than that low, and this one's low is higher than that low. So we got higher highs and higher lows of these candles. The point at which I would enter, Elizabeth, the point that I would know that I've actually had a swing point occur is when I suddenly get a lower high and lower low than the previous candle. I actually want both of those, a lower high and a lower low. And at that point, I've got a confirmation that I do have a reversal in the TAS. If you get in too early, you'll be caught out by the occasional trade that does this to you and just smashes right through it. Now, admittedly, it would still have to smash all the way through your resistance. And let's see where you had your strike to see. Okay, you had your strike at 162, which is not too bad anyway, which is about there. 162 and 163. Okay, so you had your strike up here. So turns out you were way clear of it, and it probably wasn't as critical in this on this occasion because you got the premiums. And this is an advantage of being a TAS trader, okay? Even though it's in a downtrend, because you're catching it during its pullback, calls are actually priced higher than when it's trending down. Because it's in this periodic or this momentary uptrend or minor uptrend within the overall downtrend, you'll find you catch better premiums on it. So you had a 162 and you also had a 163 as well. A 163, which is like that, right? So that's what your trade looks like, which is fantastic because you're doing it there. You were, a nice distance away from where the share was trading based on the entry day being under that candle over there. Why don't I just turn that into, yep, that's fine. And, you're still below the 30-day moving average, which is fantastic. I just think that your timing could have been even more effective. So check this out, okay? So that's quite conservative there. You still got good premiums for putting the trade there. Had you waited for it actually getting even closer and giving you the swing point scenario, okay, you may find at times it gets you even closer, and then your premiums could be even higher. Okay, great. Right, okay, so no, that's fine. Okay, so what you're saying to me is you set your premium at a limit of 23 cents. In other words, greater than your 20% return minimum, and it actually it gave you that, so it actually placed the trade. That's fine. That's fine. You may have found that you wouldn't necessarily get any more premium here because it doesn't swing. So that's okay. But just be aware, as much as you're in a good position here and it's panned out for you so far, just be aware it could continue, and then you might regret it. Now, having said that, you still have the resistance for it to deal with, okay? And you still had it trading under the 200-day moving average. So I'm not saying that would have bitten you anyway, but I just think your timing might have been potentially a little bit better, because you do have some scenarios where when it retraces into the TAS like that, it can actually approach there a few times before it does that significant swing. And of course, our skill, and that is the big payoff, is when we catch it as close as we possibly can to those strikes and still have it conform to a pullback into the TAS, you're going to get a much higher premium, and then she generally explodes back away, like your previous trade that we went through. So all in all, a beautiful setup. I just think you were a little bit early on the entry, but it doesn't look like it's going to hurt you anyway. So well done. Who learned something from that? By show of hands. Who's one of our special guests and looking at us thinking, how would I even know? It's in the course. It is in the course. That is all covered. All of this here is in module 2. So that the course consists of, 6 modules? 5 modules, yeah, plus the Q&As. 5 modules, and this stuff here is covered in module 2. So it's a big program. It is a big program, and I appreciate. Was it you, Chris, the other day, and lots of previous trading experience, and you said you had anticipated going through all the course content within a week, and being in the market, and 3 weeks later you're already up to module 2 because there's just so much gold in there, and I appreciate the feedback. So thanks for that, mate. Yeah, I've been trading options since 1998, I think. So this is, what's that? 20 years of knowledge that I had to condense into this course. It's very hard to keep it short, that's for sure. But it's very complete, I'd like to think, as well. Especially when you combine it with the Q&As and the discussions we have and the actual demonstration of the application to the setups, and most of it is about these setups. And if all you did, if you knew exactly what style of setup you were looking for, you would have a lot more winning trades. It's when the setups deviate from this that you don't get the premiums, you have trades go against you, etc. So I really like to emphasize to people the type of picture that you're looking for, so that when you open a chart and it doesn't look anything like it, that you know to move on. Yep. Oh, thanks for saying that, Elizabeth. She says, it's a big program, but it's not a complicated one. That's very kind of you. What module are you up to now, Chris? Just curious. Have you gotten through module 2? Oh, you're up to module 5. Okay, good. So you're absolutely cruising. So, I think the order in which to do the course is module 1 to 5, and I still have people, ask me, when can I start paper trading? And it's simple. You go through, I'm just going to drag it over there. Yep. Don't start paper trading until you've done module 1, module 2, module 3, module 4, module 5, and you've gone through all the Q&As. At that point, you really are ready to hit the platform. I think, in some way, I think if you're diving into the platform prior to doing all of this, it's a little bit of a distraction. So I find some people, they get into this and they start playing with the charts and not just the conceptual stuff, but they get caught up in the platform and, having it all configured and all that sort of thing, and they're trying to paper trade, but they haven't covered, this module here about how the options work, and they get themselves all confused. So the order and sequence is module 1 to 5, then dive into the Q&As, because the bulk of the Q&As are devoted to using the platform and how to identify, how to build trades, how to identify trades. And, I've even gone through the pricing up and hitting the button on it as well, and you get that in the Q&A section. So that's the order and sequence in which you do it. So it's not complicated unless you jump out of sequence. It's designed to be in that sequence. So yes, there's a lot of material, but you want to get the value from it. But if you simply start with module 1, go all the way to module 5, and then do all of the Q&As that have been recorded previously, like this one, and it's being recorded. There's a whole library of them there, and the list is long, right? It goes on and on and on. They're huge learnings right there. So yeah, good fun. Okay, so Elizabeth, you got your little tip out of that one. Let's look at another trade review. So XLE. How are we going for time? Okay, we can probably squeeze another one in. Are there any questions about what we've covered so far before I move on to the next one? Okay, Chris, that's a very good idea. You said when you get to the end, you're going back to the start. You will absolutely. In fact, I encourage people to go through those modules twice. You have a very different experience revisiting, especially module 2, I believe, in the context of actually what you're going to be using it for. So it's a little bit of a horse and cart, chicken and egg scenario when you first go through it, because you're doing all this analysis and you haven't yet, I guess, explored the actual style of trades you're going to be placing. And then we get to the part where you now know, that we're writing and we're setting up spreads and we're positioning our strikes a certain way. But in order to position our strikes a certain way, we need to be reminded of what the chart looks like and what our hypothesis is around that chart. So yes, great idea. And, I only ever set the pace to that. I always say to people, only ever benchmark your own progress or your own success against yourself. Never benchmark yourself against anybody else. That whole keeping up with the Joneses thing is just the most stupidest thing I've ever heard of. So you are either personally moving forward in your life or you're going backwards. You're never stagnant because you're getting old, right? So look at where you're at, how you're evolving through the course, and you'll be aware, there'll be parts of the course that you just embrace and you absorb and you're all over it. And there'll be other parts that, I'm not sure, maybe I need to look at it again. By the time you go back through it in the context of the bigger picture, it will click. Okay, so Elizabeth is concerned that this particular setup is going to ruin her perfect reputation. And it's going well so far, but that's okay. Elizabeth will still go through it. I will not. It's just a more aggressive version of what we've already been doing. I'm not seeing any flaws yet. So just so you know, Elizabeth, you're still my superstar at the moment. I'm not going to take that from you. It's the same. It's the same setup. Look, it's broken through support. It's doing a pullback into the TAS. And you got in on the 6th of November, which is, so the only thing, so it's there. Okay. So you're getting in on that day there. I'm just going to draw a little arrow, actually. It'd be easier. That's when you're getting in there. Put a little arrow, 6. Yep. I'm going to make this arrow nice and thick so everyone can see it. That's it, I have entry right there. I didn't want to cover that candle over. And the reason is, so again, your setup in relation to the breaking through support, perfect. That you waited for the pullback, perfect. It's just that swing point, like the last one. Yeah, just a swing point. Your timing was a little bit early. Having said that, it's working in your favor. I'm assuming your strikes are up here somewhere. You've got a strike at 73. Wow, okay, well done. Oh, really good. Look at, oh, you are a legend, girl. Look at you, well done. You're well and truly out of harm's way with your strike, and you're still picking up 23 cents. You're really good at this. You are amazing at this. 73 and 74. Don't get too frustrated or hard on yourself about my comments about waiting for the swing point, because you're still getting the credit. And I'm just saying that, you know, at some stage the market's going to change, and one of these they're going to try and sneak up on you and bite you if you're not waiting for the swing point. But this one, on the other hand, it's a really powerful downtrend that has emerged here. So catching it there, and even though it continued upwards for 2 days, you stuck with it because your setup was so good to start with that even though 2-day move against you and you're well out of, you know, the line of fire, in fact, you've still got the safeguard of this line of resistance, and you still have the safeguard of the 200-day moving average, which is swinging in your favor, where it will often sort of run into and then bounce off anyway. So, yeah, nice trade. I still think it's a nice trade. Don't get too caught up in my swing point. That was just a little tip for you, so I can continue to help you evolve as a trader. You're really doing, you know, you're finding great setups already. Don't let that break you. So again, no, I see this as textbook as the other two. So, does anyone get anything to add to that, or any questions or anything like that? So well done, Elizabeth. Another good one. Yeah, look how far she is away from harm's way. So again, Elizabeth, as this progresses downwards, which is obviously moving quite strongly, forgive me for my hand-drawn candles, they're a little bit wobbly, but as that, remember what you're going to do is at a logical point where this is not worth much, you're going to buy this one back. I'm just going to turn it red for now. I'm going to buy that back to get rid of it. Okay? And it's going to cost you way less to buy back than what you originally got. And the important thing that you're going to try and remember is that at that point, this one's not worth much. It's not worth selling. So keep it and turn it into a thick yellow straight call. So if the market returns and it runs all the way back up again, if it did, you've got a free call option there. Yeah. And keep in mind, okay, there is a strong possibility. Okay, now I'm not going to give you guys the answer. What am I seeing on my screen that may cause that to become worth more eventually? What am I seeing on my screen? What can you tell me about why that may become worth more later? Yep, type it, Chris. Volatility, yeah, but more, yes, correct. Not the answer I wanted though. Gets closer to the action. Yeah, you're on the right track with support at 65. Exactly. Well done, Niels. You've got this super strong support at 65. Look at the extent of all these candles, and they're all leading into this 65 zone being so solid. It's going to take a lot of effort to break through that. There's a really strong chance that she may, you know, find support there again and potentially bounce back up as it has before. Look at this. That's that level between 65 and that there. So if it suddenly bounced up, well, I'm going to straighten up some of my hand-drawn candles here. And, you know, she started to come back up. I'm not going to draw every one of them. That it will be increasing in value, subject to time decay. So this is another December. You know, plenty of time for it to happen. You know, that there, all of that there that's not an entire month. How long is that? From there, where we are today. Yep, that was Friday or Saturday morning for us. Back to there is only 2 weeks. Within 2 weeks, you could see it back up here again. And yet you've got December expiries here, which is substantially longer. All the more reason to hang on to your little lotto ticket here. It depends, Niels. It depends. It's not that straightforward. We can start taking profits from when that, you know, if that were to decay, you know, more than 50%, you could take half your profit off the table and get into your next trade, right? So it's that whole, if you choose bad, if you're not confident in your setups, and the beautiful thing about spreads is time decay is going to work in your favor, okay? And if you've entered during a period of high volatility like we have here, and suddenly it all settles down and it becomes quite consolidated, then the value will go out of your written options just through volatility going out of it and the time decay. All right. So I'm not going to say, I'm not going to necessarily suggest a hard and fast rule that when it decays by 50%, close it out, because you might still see, quite a bit of room for it to run. And if we're always closing trades out too early, we're never really going to have our good setups pay us to the full extent that they might. So, Elizabeth, in this case, might wait until it approaches this support level here, close it out then, knowing that when it bounces, if she's only taking out the written leg, that may, regain some value. You're getting two trades out of one for the cost of one in that scenario. But there are other factors that may also influence it, like if the overall market volatility increases, then that may not necessarily work out. It might not be as much decay. On the other hand, if you've entered during a period of high volatility, not only for the stock, but the overall market, and over the next 2 weeks, the market suddenly settles down and volatility goes out of it, she may find that she doesn't have to wait all this way until it gets down there. Volatility may have gone enough out of it by then, which may be, 5 to 15 trading days away. And so I don't think I want to advise you to get fixed in your mind of the specifics of when you would close it out. I think you need to base your decision to close out a position based on the characteristics of that particular chart. I think that is the most sensible way to do it. So, our role as chartists is to form what I call our hypothesis around what's going on in front of us. Okay, so I've just given you my thoughts on entry, and I've made some comments on how Elizabeth might be able to improve her timing of her entry. Not that there's anything wrong. I mean, she's followed, in our 12 points of entry there. It was point number. She did the first 11 perfectly. It was just the 12th one, me just adding value. Okay, so not that she did anything wrong, but not only are we looking to choose the best entry, we call that, building a case for entering a trade, but building a case for entering a trade, but we also want to formulate some sort of vision for the trade as well. So the first part of our role is to build a case for entry. Okay. But once we now know that we're entering, we need to pre-plan where we're going to take this. So in this case, we know that we're dealing with a support level down here and a resistance up there. And we are going to build a case for if she suddenly decides to run further up, what's our situation? And Elizabeth's got it covered. She's got a major resistance level protecting her there, so she can trade around that and make some decisions around that. If it breaks through, there's some defensive action, which is covered in the course, as you know, in Module 5, on how she could counteract it and turn it into an advantage. Or, alternatively, if it heads and continues down in the direction that we're all preempting based on this case that we're for entry, what it does, she would watch it and also, maximize that run all the way down here. Now, it's not going to happen in these number of days. It may take, several more days. It may jump around substantially before it gets there, right? You may have all this sort of caper going on, and I can start throwing some stuff away here. You get what I'm saying? It may not go straight there. So there's a combination of it's where it is in terms of being out of the money and proximity to the strike price that will have a determination, and in what time frame it does it as well. And how much time decay before it actually reaches its imminent. I'll try to preempt what it won't do, is jumping around like that. Okay, so if it goes straight there, Elizabeth may take one course of action. If it pauses and it bounces around, it may take a little bit longer. And that is why I don't want you to limit your, it's not that I can't, I'm being very precise here, I don't want you to limit yourself to how you will respond. Treat it on a chart-by-chart basis. You want to maximize this run, and as far as I'm concerned, we've got a major downtrend in the making here, and we know that at the end of the day, it doesn't matter what the trend is, what is the one thing that will override trend? Having said all of that, would it be okay if I spent maybe the next 5 or 10 minutes telling you about our part-time trader apprenticeship program? Raise your hand if you're happy for me to just tell you a bit about that. Okay, good. Who's gotten value so far? Raise your hand if you've gotten value so far. Terrific, because I'm only getting started. If you think that was great, watch this. Okay, so what is our part-time trader apprenticeship? It's really a 3-month coaching program. It's designed to get you into the market and making profits within 1 to 3 months. Okay, and what it consists of is the first component, which is the instant income trading formula, and it's A to Z step-by-step guide to you getting your first live trade as fast as possible within 1 to 3 months from now. As I said, everything you need to know in an online program, which is fantastic. It's an online-based program that you can go through at your own pace. It's actually digitally delivered, basically through our web portal. So let's have a quick peek under the hood. So you basically get your username and password, and you log on at any time of day that works for you. It will work on iPads and tablets. Sorry, I'm a big Apple user, on laptops and all those sorts of things. So you can even access it on your mobile devices like your phone as well. And so you can attend the lessons, and they're video lessons actually. So every one of these here, and this is one of several pages with all this incredible video content that covers all the A's to Z's of how to become a successful trader. We put a lot of work into it, and it's the sum of all my experience dating back to 1995. So it's a it's a complete video library where you can see exactly what to do to start generating income immediately. Convenient PDFs with examples and templates, everything you need to start making profits today. Also in a convenient audio file format that you can download to your phone and listen to on the go if you want to go back through things that way. Then there's a huge underground vault of archived webinars to dissect every detail and refer back to over and over again. Part of the package includes having me live on a weekly basis, and we'll record all of those, and so you get all those details. And often what I do, like I did, we had one only last night. I actually did that one by the pool in the resort, which is kind of cool, and all my students were logged on and listened to me rave on about the water splashing right next to me. But we actually went through, and I went through my list of trades that I was getting ready for last night. And so they had the opportunity to see me actually do all of the analysis and, position all of my strikes and all those sorts of things. And the process, what prices I was striving for, how many contracts I was going to invest in from an options perspective, everything like that before I place a trade. So we actually record those sessions as well. And so you can go back through that, okay, and learn, my thinking when I'm approaching a trade. We think that would be incredible. They're really helpful and handy and sort of confidence inspiring. Raise your hand if you think that would be awesome. Having all of that at your fingertips. Terrific. So let me tell you about some of the bolt-ons, some of the extras that we include. From my own learning when I was getting started, these are things that made a big difference to my learning and then sped things up for me. So another part of the apprenticeship program is our trading college, which I just talked about, where on a weekly basis I go through trades and take questions and help you through some of the little stumbling blocks of questions or things you want to get excited about, or trades that you're in at the moment and need to work out how you manage out of them, or you're looking at opportunities and trying to figure out, are they the right opportunities, should you be getting in, and how would I set up the position, all those sorts of things, right? So once you've gotten started, this is about scaling up to a really healthy income so you can quit your day job as soon as possible. We take you live trading within 3 months. Some people might quit their day job within 12 months. Okay. So it's conveniently brought for you through live streaming. So, we have the platform technology to deliver all of our training programs to you the way I'm doing it at the moment. Doesn't matter where I am in the world. Most of the time I'm in Australia. Not that it makes any difference. I live in a different part of the country to you. We have students that attend from all over the world. It makes no difference. They may as well be in the room next door to me or the same room as me. The technology allows us, and the training and the materials and the content and the method and even the trading strategies is all done online, which is awesome. You don't even have to book any travel and stuff. So I give you a ton of different trading blueprints to make things easy and help you avoid rookie mistakes. All kinds of market checks, pre-trade checks, pricing, how to price a trade, how to manage a trade, guide to when to take profits and how you exit trades and
re-enter and do all kinds of stuff, and some risk management techniques and some post-market checks as well. So here's an example of one of the blueprints. That's one of several of them. And there's another one. And the whole idea behind these blueprints is to help you save time. And this is basically, these blueprints are basically my exact procedure that I follow each trading session, all mapped out for you. It's actually there's 5 blueprints basically. You can see they're page 2 or 5, page 3 or 5, etc. And so a typical trading session would be to just, for you, pull out the blueprint, start at step 1, and go through all the way till the end. And that'll tell you exactly what to do, from what you do before the market opens, like, some things that you check pre-market, what news to read, and, getting things ready for the opening bell at a certain time, what particular indexes to look at to guide your decisions, getting ready on particular stocks and what the methodology is for actually shortlisting them down to the individual stocks. So we see about 12 to 30 new trading opportunities a day out of a list of about 200, but we don't go through all 200 of them. We narrow it down to the hottest, dozen or so. And there is a process for that. It's a very, very simple process, and you'll pinch yourself when you discover it, just how simple it is. But these blueprints actually walk you through every one of that, and saves you a ton of time. As I said, we can get you trading, investing only 6 to 10 hours a week. If you didn't have these blueprints, who knows how long? That might be more like 6 to 10 hours a day. I know a lot of people that follow other methodologies that sit in front of the computer all day long, and they don't necessarily even get anywhere near the results that we get, because it's set up all wrong from the start. They're trying to create a full-time job for themselves out of trading. That is not what we're trying to do. We're trying to use trading as a convenient I'm back. The international phone call I'm making to the webinar system actually dropped out. If you can hear me, raise your hand, please. Raise your hand. Oh, thank goodness for that. Sorry about that. If I think it must be like an international time limit on. I'm actually calling international, believe it or not. No, I'm ringing Australia to deliver the webinar, but don't freak out about the cost. I'm good for it. I'm fine. I can afford the bill. Don't worry. My wife's probably spending a lot more on hotel bills at the moment than this phone call. So don't worry about me speaking for about an hour on the actual call. I have way bigger expenses once my wife gets shopping on holiday. So don't feel bad. This is probably one of the cheaper expenses on holiday. So the whole point being that you don't want to be creating trading as a full-time job. You want it to be quick, efficient, and you want to have a process that you follow that keeps us very clear. There's no guesswork with our methodology. There's no, am I feeling lucky today? There's no, what's the weather like? What's the, are the stars aligned for me to be trading? No, it's none of that. You open the blueprint and you start at point number 1 and you go through to the end. And there's only 5 pages of it. And it gets to the point where that you know it off by heart. Like, I don't pull the print out, the blueprints out on paper. I know it intuitively in my head, and I'll get you to that point. Within 1 to 3 months, you'll get to the point where you know what's in it, and you just follow that, consistently. And that's what gives you the consistent result. You need to have that strategy all mapped out. There's no deviation from that. Now, it's taken me, since 1995 to develop that blueprint. First, I needed to develop it for myself. Then I needed to have, some people test it as well, make sure they got good results. And we have fine-tuned it over the years, because I needed to find a balance on how I like to do things and how other people like to do it. And we are there now, and we've been there now for a few years, for quite a long time, in fact. And I've got some incredible results that have been achieved by some students that have walked before you, and the lifestyle changes and the benefits that they've had, etc. And we're at the point now where we want to share it with more people. I took 3 years off until a few months ago only, from educating. And I absolutely missed it. I missed the ability to touch, move, and inspire people and show people how to do this and, how to make changes in their life and just get excited about life again. As adults, life can make us so miserable. I mean, think back when you were a child and you were really excited about what you would become. And are you living that dream now? And too often I discover that people are not living that dream. And let me help you. Let me solve that for you. Let me show you how to have more fun in your life. Okay. So it also includes a private training room where we've got, all our community basically come together and they compare notes and they, chat about trades on a daily basis. If you're looking for new friends and some trading buddies, that's what you're doing. Okay. We do also hold a 2-day boot camp as well. We ran one only a week and a half ago. It was the first one of those I'd run in years, and it was just incredible. So these were for people who are already enrolled in the part-time trader program. They'd done all the online training. They'd attended all of the weekly Q&A sessions live with me online and everything like that. But they jumped at the chance to actually come and experience it face-to-face in a classroom. They brought their laptops. They showed up on the Gold Coast. The weather was beautiful and everything like that. And we had a ball. And it was about actually working together and reviewing all of the understanding of the strategies and, their interpretation of the blueprint. I actually traded live in front of them. I helped them set up opportunities to go home after the session and go and place those trades during the program. It was incredible. They actually made money during the course. And in fact, I made enough money during that particular course to actually cover all the course and the travel. We think that's pretty cool. Raise your hand if you think that would be very cool for you. Absolutely. Okay. So you're actually going to spend 2 days live with me and my experienced traders. There's one in particular that's just an amazing guy on my team that you in Ash, who you definitely want to get to know. Ash. He is just incredible. He started as a student many, many years ago, and he has worked on my team for about 10 years now as well, actually. That's less than, about 9 years, but started as a student, and now he's a high achiever in his own training results, and he actually runs our customer support and all those sorts of things. So you're being supported by people who have walked the same path that you're looking to walk, okay? Not just in me, but the people that I'm absolutely blessed and privileged to have on my team and call by, my staff. Okay, so good, solid hands-on, getting feedback and iron out any gaps in the 2-day boot camp. So valuable extras included also my Trading Wisely online training program. If the US market's exciting, but you'd also be someone who would want to be trading the Australian market, and you are in a position where you can have the time to do so during the daytime. So American market's great for someone who's still working a job during the day, because we trade the American market after business hours. The Australian market is good for someone who has the time during the day, because they can actually trade when the market's open during normal business hours. So raise your hand if the US market would work better for you, because it's after hours and you can still do your day job in the meantime. Raise your hand if the US market would be better for you. Okay, great. Terrific. Okay, good. But for those of you who also want to trade Australia, we do include Trading Wisely for you, okay? Patterns for Profit is, to this day, I still think it's the best training on reading chart patterns. I know it's my own, and I produced that program way back I actually have been trading the strategy for a very, very long time, way before then, but I actually produced it into a learning program back in around 2005, 2006. And to this day, I still think it's the best training on chart patterns, bar nothing. And there's lots of stuff on the internet, but Patterns for Profit is still the one that makes me more money than anything else I've seen. Okay, so included also in the package, you get the trading platform. When I got started trading, you used to pay, anywhere from $2,000 to $3,000 just for charting, and even then it was end of day charts, wasn't like live charting. Now we give you, real-time trading platform where you don't even have to pick up the phone. You can place all your trades through your computer. You see a trade, you place the trade, moments later, the trade is in the market and the best pricing you can actually have on the planet. So incredible tools and convenience, these days compared to when I was getting started. So, through the one trading platform, you get all your charts and your templates and all your settings, watch lists of all the most liquid options. And we also provide you a practice account through the training platform while you learn. So you can use play money. So, you do all the lessons and we set you up with a paper trading account with as much money as you want in it, and where you're trading everything as if it was live, except you're not risking your own capital. And that just helps people accelerate their, the opportunity and fast track their learning massively. A great facility to have. Who agrees that, having play money in a real account setup would be awesome? Raise your hand if you think that's awesome. Don't have to risk your own capital. Yeah, terrific. Okay, so live trades directly to the market, and I love that. So, for example, in Bali, I trade, the market's going to open in the next couple of hours. And, it's the US market. I'm in Bali. I have my computer ready and I can trade for a couple of hours tonight if I wanted to. So a complete system for boosting your cash flow, potentially make an extra $2,000 to $10,000 per month. As I said, I'm sitting looking at a profit already this week of $17,000 personally. Earn at home as a part-time trader doing only 10 hours per week and have the extra money to do the things you want to do. All right, so it comes to your investment, obviously the part that you guys know is coming. Okay, so the instant income part of the course is $6,490. The weekly coaching, live coaching with me, and this is our point of difference. I just really, really want to emphasize. There are obviously other courses out there and there are other trainings that you can look at, but they don't have the live support component like you get with us and me as an experienced trader, actually placing trades right now, sharing those trades with you, comparing notes, showing you what I am just exiting, what I'm already in, what I'm looking to get in on a weekly basis. This part of the course should be worth tons more. And we're putting a value of only $2,995. It is our unique point of difference. Okay? You get all the checklists and the blueprints. You get the trading room. You get the 2-day boot camp. You get the trading wisely, and you get the patterns for profit, as well as the trading platform. The package, the total value of the package is nearly $18,000. So $17,964 when you add up all of those components. Now, as I said, I've been training people since 2003, and I have a library of emails and letters and, what else is coming? Videos of testimonials from people. We keep getting them, it hasn't stopped. And it warms my heart just to see the difference we've made to so many people in so many different, some people came for money and they've ended up leaving a job they hated. Some people had the opportunity to send their kids to better school. Some people now have paid all their bills. Some people have gotten into property investment. Some people have now, replaced the terrible, jalopy of a car that they used to have, and that's made a big difference for them. Some people have helped sick family members get better care. Some people have put their parents into better seniors living, because they've always wanted to thank them for their wonderful thing. It's just the results differ enormously. But I don't know what results you need, but I can tell you this. This is the place to get it. Okay? This is the place to get it. So what about you? If you had an extra $6,000, or even $10,000 per month coming in on a regular basis to you, thanks to your part-time trading, would that help you reach a few goals? Would it be worth starting something new for? All right, that being the case, let me do something really good for you, okay? Here I am on holidays with my family, having an absolute ball, not a care in the world, and, all the money to cover it. In fact, my expenses this week have not kept up with my income from trading. So that makes me feel really good about where I am in my life. Okay, so instant income, the cost of that on its own is $6,490. I'm going to throw in the weekly coaching for free. So if anyone is actually looking at this at the moment and I'm interested, who's thinking about it? Just let me see a show of hands. Who's thinking about it? Raise your hand if you're thinking about it. Yep. Okay. You're seriously thinking about it. So if you're serious about this, who's really serious about making a lot of money and changing their life? Raise your hand if you're really serious about making a lot of money and changing your life. Raise your hand. And you want to do a lot of the stuff that we talked about. Great. All right. So I'm going to include the coaching. I'm going to include all of the blueprints. I'm going to include the trading room. I'm going to include the 2-day boot camp. I'm going to include the trading wisely, patterns for profit. And even though the platform should be worth thousands of dollars, I'm going to include it for you. because I want to see more of what I have in your life. Okay? In other words, upgrades worth over $11,000 I'm going to include, which means that your investment, instead of being nearly $18,000, your investment for becoming a part-time trading apprentice today is only $6,490. A small price to pay for something that could be coming in. As I said to you, you could be making a lot more than that on a monthly basis. So your investment is risk-free. We're at the serious end now. That's because you can check out the Part-Time Trader Home Study course, meet the other traders in the group, and there are lots of them, ask lots of questions and dig deep of me and all my staff. You can play with the trading platform to your heart's content. And if you decide it's not right for you, within 7 days, we'll give you a full refund of your investment, 100%, no questions asked. Okay, I have no problem. As I said to you, I'm the kind of person, I'm not a massive risk taker, but I do make quick decisions, and I like to see what doors are behind the next door. So if it was me looking at this program, I would jump in, and I would know that I've got 7 days to explore every facet of it to find out whether or not it's for me. And I'll know within 7 days if it's the right choice for me. And I would also feel confident knowing that if it's not the right choice for me, I can actually withdraw from it and get all my money back. Who agrees that that is a great little policy? Raise your hand if you like that policy. Okay, raise your hand. Yep, perfect. Very good. Okay, so this trading will suit any level investor. Whether you are new to trading, are you new to trading? Raise your hand if you're new to trading. If you're totally brand new to trading. Wonderful, and this will be amazing for you. Or you've been trading for a few years. Perhaps you've not been getting the results that you dreamed about because you've done other sorts of training or whatever that might be, right? For whatever reason, we can't gripe over the past, but let's learn from the past mistakes and let's get you the right training this time, okay? So if you're someone who wants to create a healthy side income for yourself that could be looking at becoming your full-time income at some stage, even on a part-time basis, then this could be incredible for you. This could actually help you save enough money to have a deposit for a home. I actually used my trading to buy my first investment property and have bought several homes since then and several renovations and now own tons of land and property development projects and all the like. It started with trading, okay? Pay off your mortgage. I own some of those properties outright with no debt, by the way, and they were in the millions of dollars and had no debt. Came from trading. Provide more for your family like I like to do. I'm very honored and blessed to have a family, and I like to treat them really well. Go on more holidays, or maybe like me, you want to fire your boss like that. That was once important to me. So financial freedom, just ahead. Trading has created financial freedom for me and my family. It's the best feeling, the freedom to create income from anywhere in the world with the convenience of doing it from your laptop. So an important question for you right now is, if I could make it really simple and affordable for you to get started making money as a part-time trader, who would be interested? Raise your hand if I could make it really simple for you right now. In other words, give you an even better deal than the one that already has over $11,000 worth of bonuses. Okay, raise your hand if you want a really good deal. I'll only if you don't raise your hand, I'm not going to give you a good deal. I'm just going to call it quits right now. But if you want an amazing deal, raise your hand. Come on, raise your hand. Okay, that's better. Terrific. Okay, just for those people who raised their hands, I've got a lot of people attending, and some of those are like taking their hands up. Other people are like, oh, really? Okay, raise your hand. Just put your hand up if you want an amazing deal. Not that complicated. All right, that's better. Okay, now it makes sense to me. Like, why wouldn't you raise your hand for a good deal? You'd rather get a crappy one? All right, not that it's a crappy one, but you know what I mean. All righty, so today only. I've made a note of who's raised their hand. Today only, I'm going to give you $1,000 scholarship towards your first trade. What that looks like is instant income instead of being $6,490, and we're going to do it for only $5,490. Okay, amazing. All right, I'm still going to include all of the other important parts of the course. So your total investment today is only $5,490. Okay. Now, if you're someone who prefers to pay on a monthly basis for your convenience, that means you can get started with a deposit of only $990 today, and then starting next month, you're only paying $450 per month for 10 months. Yep. That gives you a total of $5,490. So imagine what this good opportunity could do for you. Perhaps you, in just a few months, you could be on holidays as well and having a good time and making lots of money in the process. You know, enjoying all the benefits of trading. So just to summarize, today only, save $1,000 and get $11,474 worth of upgrades included in the apprenticeship program. Start your 7-day risk-free trial of the part-time trader apprenticeship. And just so that you know, if you're ready to jump in and make a great decision, if you go to this link here, which is bit.ly/part-time apprentice, the uppercase P, T, and A is important. So make sure you do that if you want to grab that for just $5,490, in other words, $990 today plus $450 per month times another 10 months, and that gives you the total there. Or the super duper bonus, if you're ready to make a decision and you're in a position to save even more money, then pay in full today for only $3,990 as a one-off payment, and you will be in and you'll get some extra bonuses with that, which we'll tell you about if that works for you. So, you know, go to the online order form now if that's for you. The decision is right in front of you. Just do it and you won't regret it. On that basis, thank you and good night, and I wish you many, many happy returns and success.